The Federal Reserve just cut interest rates by 50 basis points, so we have a lot to cover on this video, how it's going to affect you whether you're buying a home, selling a home, or even if you're just hunkering down and hanging tight. But before we get started, if it's your first time to the channel, my name is Steve McCutcheon, and I'm a realtor at Berkshire Hathaway. On the Living in Central New Jersey channel, we cover everything related to the Central New Jersey real estate market. So if you want to be the first one to know what's going on in either Monmouth or Ocean County real estate, feel free to click the bell, hit the subscribe button. Let's get this video started. Before we head on into how it's going to affect you as a person, buying or selling a home, or even just hunkering down, we have to kind of understand also what's going on within the economy. So the Federal Reserve, like I said in the intro, dropped interest rates by 50 basis points or half a point. The reason this is so important, why everyone's kind of freaking out about it in a sense, is this is the first rate cut we've had since March of 2020, so over 4.5 years ago, which is a pretty long time for that to happen. Now, sometimes they've stayed stagnant at points, but this is the first cut that we've had. It also is, obviously, if you remember back then, we had a global pandemic going on, things were tightening, people were getting laid off, that kind of thing, and something needed to be done in order to stimulate the economy. Basically, we were borrowing free money at the time. Mortgage rates dropped into the high twos, low threes. It was quite a good time for affordability. But also the other big point is they cut them by 50 basis points and not just a quarter point or 25 basis points. 25 is their typical cut that they're going to do or increase. They do it in smaller portions, just so nothing too drastic gets done. But 50 basis points pretty much signifies that they think the economy is getting stronger, inflation is under control, which obviously over the last couple of years definitely has not been. And that's just not talking about houses like we do on this channel, but your overall everyday expenses. So in a sense, they think the economy is getting better, and that's why they did a 50-point basis drop rather than a 25. Now, how does this impact housing? Well, with interest rates, or I should say mortgage rates, they actually don't follow what the Federal Reserve technically does. So mortgage rates are based off something called the 10-year Treasury, not just the interest rates that the Federal Reserve just cut. Now, typically, do the two coincide with each other? Yeah, I would say that's pretty common for the most part. They're going to follow the trend, as is everything else. But they necessarily don't have to. With this last cut, if you notice, the mortgage rates didn't really move that much. The price was already baked into it. The market kind of assumed that, all right, this 50 basis point thing seems to be happening. And that's why we've had interest rates or mortgage rates dropping steadily over the last maybe month and a half or so. And they're sitting, as of me making this video, around 6.15% or 6 and an eighth, pretty much. So they haven't really moved that much, and that just kind of shows you that, yes, they don't necessarily follow exactly as the rates go. And if, let's say we were assuming a 50% basis cut or 50 point basis cut, but we only got a 25, you probably actually watch market rates go back up even though we had a cut. So they don't necessarily follow the interest rates being done, but more times than not, they will follow the trend eventually. Now let's get into how this is going to affect you, whether you're buying, selling, or if you just own a home in general. So on the buying side of things, mortgage rates are going to directly impact you the most, because that's obviously going to be how you find what your mortgage payment is going to be, right? So if you buy a $500,000 home at 7% versus 6%, obviously the 6% is going to be cheaper, assuming everything else is the same in terms of insurance and property taxes, that kind of thing. So let's just kind of take that for an example. Let's say you buy one at a $500,000 home, 7% interest rate. You buy the exact same home, 6% interest rate. You're basically going to save about $250 on average, give or take, depending exactly how it goes, but rough estimates. So that's obviously going to affect people's monthly income. So when people say they don't want to trade in a home because they have a 3% interest rate and they want to trade it in for a 7%, that example, if you take $250 for every single point that goes up, that's $1,000 difference. And you can understand why people want to hunker down and not sell their home and upgrade, because it's a little bit difficult to do. So when you're buying, you're going to be able to afford more of a home when the rates come down versus when the rates go up, obviously. Now, let's say you bought a home within the last 2 years or so. So with interest rates obviously being much higher than what they previously were, and you didn't have the chance to refinance into a high 2, low 3% range like a lot of people did. So you're probably sitting somewhere in the mid to high 7s, maybe even low 8s. How do the interest rates dropping down affect you? Well, over the last 2 years, I can't speak for the rest of the country, but here in New Jersey, at least, especially in our area, we've seen appreciation continue to rise, even with interest rates being higher. It hasn't really affected our market very much or impacted very much. So odds are your house is probably going to be appreciated in price over the last 2 years, more than likely than not. And you're sitting at a high 7, maybe low 8s. So what you can do is refinance, because you have equity built into the property, and this is going to lower your monthly payment down. So you're going to be able to lower it from that, maybe 7.5, 7.75 down to a low 6% interest rate, and you'll save probably, like in the last example, $250, $300, maybe even $400 a month. And I'm not sure about you, but most Americans probably can use that extra $400 a month in their pocket or going towards other bills in their household. And last, let's just say you're on the selling side of things. What's going to happen when interest rates come down for you? Well, first, a lot of people over the past year, I kind of mentioned before, felt like they've been stuck, or the last couple of years, that they bought in such a low interest rate environment, their monthly payment's so cheap, how could they ever give up the home that they have, even if it doesn't necessarily fit their family's needs, and maybe they're kind of bustling out the seams, they need to upgrade their home, but they haven't been able to, they've basically felt trapped. Well, when interest rates come down, it's going to give those people the opportunity to then go upgrade their home to the size that they might need or that they want to for the future. That's one option. The second one might be, okay, well, interest rates came down. Maybe instead of trying to buy a home and be competitive in this, this new market that we have, maybe they're just gonna be like, okay, I can now refinance or take money out, do a HELOC on my home, and then upgrade it, add an addition or that kind of thing. So then it will fit their needs. And it's a little bit more affordable at that point versus HELOCs when they're at the top of the market, you're talking like 8, 9, maybe even 10% for some people. So this is gonna give sellers at least a different option for what they wanna do. And they're not, hopefully they're not gonna feel stuck in the house that they have, and they can go explore different options. Now, how will this affect our market that we have here? I can only speak for New Jersey because obviously I live here, this is where I work, and the home prices that I know. I think this will probably be the most of the trends that we see throughout the rest of the country, but I can't speak for all of them, so just take it with a grain of salt and adjust for your area if you're watching this from a different state. But I see this being similar, not exactly the same, but a similar level of what we saw back in 2020. Interest rates came down, everyone jumped on the bandwagon. It's like, we have to get in now, this is the best time to buy. It's probably going to have a similar feel to it. Right now we're in the low 6% range, and I know I've had personally just some clients reach back out, people that put it on hold, it was too expensive when the rates were in that high 7 range, and they were like, hey, I think this might be a good time, what do you think? And we've had a conversation about it. I wouldn't be shocked that a lot of other agents are having those similar conversations with clients of their own. So what that signifies to me is a lot of people are going to be back in the market and wanting to purchase. But the biggest problem that we've had here over the last 4 to 5 years is inventory has been very low. It's actually been pretty much the lowest we've seen, or at least we have on record across the entire US. Builders weren't building as much because interest rates were too high to borrow money in order to complete their projects, so they couldn't get it from there. The resale value, we've already talked about multiple times, that people didn't want to sell their home. That's also going to be there. So unless enough people wanted to go then trade up their home, I see us having a very similar issue with the inventory. And when you have more people looking to buy a home, then we do have the amount of inventory available to them. Obviously, prices are going to shoot up because you're going to have multiple bid situations again. If you're looking to purchase a place right now over the next 6 months, is probably going to be your best bet. The competition is still going to take some time, a little bit. We do have an election coming up and people do freeze, so that might give you a little bit of an in order to sneak into a home. The second thing is next spring, when everything has already shifted, we know the outcome of the election, we can kind of get a little bit better of an idea of where rates are, the economy, job charts. It's going to, it might be, I'm not saying it's going to be Armageddon again, but it's going to be a lot more harder to get a home when it comes next spring, more competition, a lot more buyers out there, possibly not as many homes available than it will be right now. Typically things slow down after the fall, especially during the winter time, so that November, right around Thanksgiving time, up until I would say like that mid-February, typically when we have the Super Bowl, that's when things start to speed up a little bit. So over the next 6 months is going to be your best chance to buy, get in for a decent price, and also when the rates are still on the downward trend. And if you're selling, right now it doesn't really seem like there's pretty much a bad time to put your house on the market. The majority of places, especially if they're updated, relatively decently priced. I'm not saying you don't want to be so far over the top that you missed the mark, but if you're within the conversation, you're going to more than likely you're not have multiple buyers on your property, typically bid it above asking price, and then moving on. So right now, still a really good time to sell, but if you're on the purchasing side, like I said, I would get in sooner rather than later. Let the appreciation of your home build up, and you're going to be a lot happier for it. No one's really upset that anyone that bought over the last 4 or 5 years, and I think they can rightly say that if you ask any of them. So pretty much, you have to kind of choose 2 options, right? Would you buy it at a lower interest rate, probably next spring or next summer? Yeah, I would say yes. But if the home price is just going to go up anyway, your monthly is not going to change that much. So me personally, I'd rather be the one sitting on the appreciation and equity in my house versus just having a lower rate, because you can always refinance later too. So that's pretty much what I think is going to happen, guys. It's hard for me to foresee anything other than prices going up, more competition being out there for buyers, and then home prices, unless we get a significant push in inventory. So new construction, resale sellers, everything like that. But otherwise, that's where I at least see the market going. So I appreciate you sticking around to the end of the video. If you have any questions, drop them in the comments down below. I'd love to answer them. So feel free to reach out. And if you're looking to buy or sell in the Central Jersey area, all my contact information is also in the comments and description down below. So whether you're 1 month, 3 months, 6 months, even a year out, it doesn't matter to me. Let's just get you on the right path towards your real estate goals. And if you're looking to move to a different part of the Central Jersey area, check out the 2 videos popping up, and hopefully I'll be able to too. Have a great day.